Good day, everyone. Jamie Sumner, Chief Analyst of Sea Freedom Brew. For this week's webcast, I thought we'd look at the Federal Reserve Bank of Philadelphia's maps that they put out for the Coincident Index, which is 3 months looking back, and the Leading Index, which is 6 months looking forward. And they put this out every month, and it's for all the states throughout the United States. So let's go ahead and look at the maps here. First, we have the December 2016 Coincident Map. And you can see pretty much the majority of the states are green, and that's positive. That means there have been some growth in all of the states, just about all the states. We have a couple of red, North Dakota and Alaska. Those are the only two red states right now within inside the map. So it's a pretty uplifting type of map. It looks good. We're continuing to see the growth. However, the drawback here is that the growth has kind of slowed throughout the year. We can continue to see growth has slowed down. And we can see that by looking at some of these numbers. Where we have the 2016 year-to-date number, the average is 72 basis points. For this month of December, the overall U.S. growth rate was 63 basis points. So a little bit of slowdown. We can see that more readily when we look at the line chart here, where we see this continual downcast right here within the growth rate. So that's positive that we have growth. However, that's negative that growth has been slowing down in here. When we look at the 6 months moving forward, or the leading index, we can see a similar occurrence. A lot of the states are green. We do start to see a couple of states pop into this red area, orange area, where we have negative growth in here. So we have North Dakota and South Dakota, Michigan, Illinois, and Mississippi, all within the contraction over the next 6 months. And then we look at the annual average here for 2016, and the growth rate is 1.38%, higher than our current December number at 1.17. And a similar chart when we're looking at the overall trend in growth. We have positive growth. This black line is zero growth. So overall, we have positive growth here. However, we've grew at lesser amounts every month. Just a little warning about what this could be predicting. You can see whenever we see this big drop off, these are recessionary periods. This is 2008. And then we have back in 2001, 2002 almost with that recession. So whenever we see this big drop, it's time to step back and kind of analyze it a little more. We haven't seen that tremendous drop below zero, but we are approaching that as time comes. We're getting that lower and lower growth rate. Now on Friday, we had the jobs report come out. It was a kind of a positive. We had a large number, over 200,000 jobs created in January, which was very positive. However, what we saw also was that the unemployment rate actually went up. And this is the second month in a row that it increased by 0.1%. So now we're up to 4.8%. We also like to keep an eye on that U6, or that total unemployment rate. And while we saw that decline throughout the past couple of months, in January we saw it increase by 0.2% from 9.2 to 9.4. So overall, we've had this flush of individuals into the employment market, and we start to see these numbers rebalance here a little bit. We're still at well employed. That's a very low unemployment rate when we look at where we've been. But the increase here is something to keep an eye on as we move forward here. Well, that's what we have for you today. Next week, we'll look at some bank trends with inside of the ratios that came out on the fourth quarter data. Everyone, have a great week.